Hey everyone, Michael Manatskainen here again for another live session of the Wealth Through Real Estate question and answer, as well as deal analysis. Really, this is your time to ask whatever you want, and I'm happy to help you. As a reminder, I'm a real estate investor with just around over $20 million of real estate, which accounts for approximately 50 rentals. I'm a capital raiser as well. I've raised over $3 million and we've deployed a decent amount of that. And I'm also a lender myself. I've lent out over $250,000 to other real estate investors. And my goal is simple. I want to help you be financially free and generate wealth through real estate. So this community is primarily the best for those that are buyers, lenders, capital raisers, people who are intentional connectors. But there's a lot of free resources and tools and education and content for anyone who's trying to get better at analyzing deals, really negotiating effectively and all that good stuff. As a brief intro this time, I'm going to go through a few things to share some of the various resources for you. When you join the free Wealth Through Real Estate community on School, it's just school.com/wealth-rei, and it's also linked in the description below. You're going to go to the About page, sign in. We have over 360 members at this point that are, once again, just an awesome community of people who are putting in the work. We have at least, it looks like 9 people who are here live today for this Q&A. The number one thing is going to be the community section, where it's, a bunch of different things. Here's just a highlight, like the more you engage on School, the higher your score goes. And every single month we announce winners for various prizes, including 3-month access to a paid real estate investing community, you get a lifetime access to a paid creative finance calculator, the one that I use and my business uses for every single one of our deals, consultation, as well as various prizes from one of our sponsors, PropStream. So just check that out when you get there. Here's my official notice of quitting my W-2 just around 1 month ago. A lot of intro for new guys and just everyone sharing who they are, what they're looking to do, and all that good stuff. This is where the magic really happens, is the community of like-minded investors just working together to get things done. There is a classroom which has, start here, intro section. If you're interested in purchasing properties, leveraging traditional financing, just kind of the normal way the majority of the world does it. There's a lot of training for that, and then how to utilize the calculator. There's creative finance training too, primarily geared towards analyzing real estate investments creatively, starting with a masterclass and then more specific deal analysis. And then live underwriting recordings are all linked here. So our weekly calls are live, and then we add them in here. So it's the Q&As and underwriting all together. As always, you can sign up for the weekly live underwriting session. It's just in the classroom, or in the calendar. Click on that. You can add it to your calendar, so it's automatically a reminder there for you. Makes your life a lot easier. And then the leaderboard. So if you want to keep track of where do you stand. So let's say the month was over. So it's September 18th now. Let's say the month was over now. These would be our 4 winners right here for the prizes this month. So the more you interact with each other, the more you post, comment, like each other's stuff, the more you will increase your score and then win the prizes. And, you can post a lot and hope people interact with your stuff. But the best thing you can do typically to get people to interact with your stuff is also to interact with their stuff, right? Like they see the same name. They're like, oh, look, that's my friend Gary. That's my friend too. That's my friend Richie, or actually goes by Fabian, but my friend Nadine. They're liking and commenting on my things. I want to, out of respect, I want to do the same for them as well. Oh, dang, Ronnie's our all-time winner too. Awesome. So yeah, once again, that's the School community. There's a lot of great content in there. And you know me, I'm always adding more stuff as well. So keep them coming, keep asking your questions. I really want to help you all achieve financial freedom and generate wealth through real estate. The main vehicle to help me do the same. If you want to stay connected with me, Instagram is the #1 way. It's very simple. It's Michael MNAT, Michael M Nat. Typically when you type in Michael M, it's the first one there. I'm posting more and more content, especially recently. So if you want to learn more about personal finance, real estate investing, all that good stuff, this is your place to do it. I also have a YouTube where there's a lot of deal analysis, capital raising, a lot of long form content is also here. It's similar to the School. However, the School is much more organized than YouTube. Good luck trying to go through it all, but yeah. So go through it through School primarily, but my YouTube has a bunch of stuff. We're just starting the journey. We got 250 subs. We'll get more soon. and it's intentional investor. So that's a big thing I pride myself on, is being intentional with my investments. If you want access to a lot of my resources, similar to Instagram, it's michaelmnat.com. We have a free masterclass going out tomorrow, actually, September 19th, Thursday, September 19th, 3 hours, where I'm going to go into how I was able to achieve financial freedom in just 2 years through real estate investing, and how you can build your own portfolio and you can do the exact same thing following the exact steps that I did. I'm just literally sharing my journey very transparently, answering all the questions you might have. It's your show. I just want to share what I've done. Hopefully it helps people out and answer whatever questions you have. If you want to buy the Ultimate Creative Finance Calculator, that is here. You can do that. If you need some one-on-one consultations, you're always welcome to do that as well. But I have a ton of free resources as well, including free creative finance calculators, some free trials to some of my favorite tools. And last but not least, the Intentional Investor Community. That is my paid community. It is starting up officially October 1st. This is for those that are serious about following the blueprint towards financial freedom. Primarily as buyers, lenders, capital raisers. It's much more step-by-step guidance, not just a lot of information and content to help you out, but really step-by-step guidance. Here is the blueprint to help you do so. Starting with the foundation of being a master deal analyzer. So you saw 4 or 5 deal analysis in the free community. Is going to be 10 of every single acquisition type, 10 plus of every single every acquisition type, every management strategy, all that good stuff, so that you become a master deal analyzer and really understand how to buy real estate, leveraging creative financing, leveraging other people's money, and then lend all of your money out, just like I do, to get high interest rate returns on your money. All right. So we also started the Veteran Investor. I highlighted that during our live weekly session last week, actually. And we started Veteran Investor this Monday, September 16th, where I'm taking people and helping them step by step, hand-holding them on their journey to financial freedom through real estate investing. So if that's something you're interested in, it's closed off for now, but just let me know. The Intentional Investor, as I mentioned, starts October 1st. If you want to join at the discounted rate, especially if you're watching this now and you're already part of the community, it'll be $200 a month starting October 1st. It will go up as more members are there, because I want to limit the amount of people that are in the community so I can add value to everyone that's actually in there. And you'll unlock a bunch of cool things. You'll get the Veteran Investor curriculum and videos. You'll get access to it, the resources that they have. I won't be hand-holding you all the way there, but you'll have access to all the information that I'm literally sharing for, let's just say, a ton more money than $200 a month. And you'll get half off on all of my tools and resources if you need consultations, calculators, whatever. So if you do want to buy the calculator, it's $400. Wait until you join Intentional Investor and then buy it then when you get the discount code. So for $400, you'll get into the community and you'll get the calculator. Just wait if you've been on the fence about buying that. Otherwise, if it's not the right time for you, no worries. I don't think people should be paying for money unless they're leveraging what's available for free in the first place. So leverage the free investment calculators, the free content I provide on school, on YouTube, on Instagram. But if you're ready to take it to the next level, that might be the area for you. And then there's more live weekly sessions together. So with all that being said, the show is yours. I just conducted a hour-plus long training for Rob Avasola's community on Monday. There was a lot of great questions that were asked of me that I can help provide more context if that helps you guys. But first, I want to see if there's any questions or deal analysis you guys need before I just kind of go on a variety of topics that I just went over the other day. So what do y'all got for me? Anyone have any questions at all, or you want me to just go into it? No deal analysis, no questions about anything? Surprised Aaron doesn't have like a pad split deal for me to analyze. Just kidding, Aaron.
I'd like to just introduce myself. My name's Miguel. I'm a veteran as well. I was in the Navy for 4 years and I did reserve 4 years after that. I was really intrigued by your story on sub-2 community. So I was like, I got to follow this guy and see, hear your story. So I'm hopefully going to chime in on Thursday. I also have a newborn. I noticed you have a newborn. Congratulations on that. I'm kind of going through the motions right now and trying to figure out my schedule and how it all fits in. But yeah, I'm just happy to be here and looking to network with other folks as well. So.
Thank you for that intro, Miguel. I appreciate that. Yeah, guys, please feel free to intro yourself too, especially if you're newer in the community. The only way you get things done is with other people and through other people. So you got to share what you got going on so that it'll that's how you're gonna take it to the next level. It's with other people. So let's get to it. Thank you for
Hello.
the congrats on the baby. That's like what really caused me to say, why am I still working a job? I'm way past what I should have, like way past my first, second, and third levels of financial freedom. It's time to just go all in on this thing, completely control my schedule. And my newborn was like the number one driver for that. Where is it? This little gal, right? I can't do it right there. That little gal right there is like my driver for everything, and freeing up my time was a huge part of it. And then just focusing on helping others do the same is just a huge component of what I'm trying to do now. So thank you for sharing your intro, and I appreciate everything you said. Anyone else want to intro or have any questions at all?
Hello.
Yep.
Can you hear me? Hello. I'm gonna introduce myself. Thank you, Michael, for the invitation. Appreciate it. Always, yeah. I wanna say the same. It caught my attention. You grow so fast, and I like that because you put in the work, and you can realize it, people put in the work, and I just log and I closed my first wholesale deal. So it's you're on the race. I'm just starting my journey. I did one fix and flip and one wholesale deal. I got a couple in the pipeline, so I got one. Probate is coming, so I'm glad to be here
The funny part is I know your story. The funny part is you're really understating this. It's not like a 5K, 8K, 10K assignment fee wholesale deal. Do you want to go over it a little bit at the highest level that you're comfortable talking about?
Okay, yeah. So I do door knocking and in SoCal. I started 6 months ago, but I never see a result, and and I've been knocking, but I was doing the team run, and I've been watching some video like live with people talking about foreclosure, and I say, oh, I think I need to adjust so those kind of different thing over here, and that was Monday. And Wednesday I went to a house, and the lady said, I'm glad you come, I'm ready to sell. And it was a follow-up. It was the second time I knocked at the house, and we gonna about to flip the house, but we tied with the numbers, so we decided to wholesale the house, and we
What's the
are
assignment fee?
99,000 was.
$99,000
Yeah,
assignment fee.
yeah,
That's why cash deals, if you're a wholesaler, this is the reason why I've had almost 100 deals, wholesale cash deals, and why I did less than 5 creative. It didn't make a lot of financial sense. Cash deals, if you want high
yeah,
assignment fees, cash deals are the way to get it because you're arbitraging equity spread, not just cash flow and entry cost. That's very hard to have a substantial assignment fee for that for a creative deal, unless someone's walking into
yeah.
equity is not common. So congrats on you for getting
Thank
that
you.
done
Thank you.
with your team and knowing, and I know your team.
Yeah,
They're awesome.
yeah. The team that was I just set the appointment. They did the rest. I learned a lot. Well, the first time it happened, and now today of 3, I gonna meet with Abdul. We're gonna hopefully lock another one. So
Yep.
I got an appointment today. So
And I always tell people, like, I want to be your go-to for buy and hold real estate investing, raising capital, lending money. You want to wholesale, fix and flip, whatever. I
yeah,
know so many people. I would rather connect you to those that are doing doing it, and that's all that primarily what they focus on, as opposed to trying to do the things that I'm not actively doing. I'm buying real estate, raising money, and lending money. I want to help you build wealth through real estate. That doesn't come from wholesaling. It doesn't come from fix and
yeah,
flip, but those are active income sources that allow you to do the things that you want, right? Through that
yeah,
avenue, and potentially help you buy investments. But for me, at this point, I'm not using my own money. So, I don't,
yeah.
but if it makes sense for you, I
So
support.
I started wholesaling because I need, so I quit my job when I did my fix and flip. I was doing the minimum wage, and I said, because the world went down, and say, oh, I know my sense. So I get money from my fix and flip. I save all the money and say, okay, I can live I started doing door knocking every day, and every day I was like Sunday, Monday, every day was.
Every single day
Yeah,
for a lot of
but
hours
I
every
was
day.
doing the stuff wrong, and I
Yes, you
never
were.
do follow up. So I started adjusting all the stuff, and now, yeah, my end goal is gonna be start buying whole. But I need to start making some active until I start. Uh, Also, I want to learn how to start handling all the stuff because it caught my attention because that's my end goal.
Right.
Start buying whole.
Especially if you want to be passive, right? If you want to be
Yeah,
passive at some point, it's not going to come from wholesaling. It can help you get there. But if you want passive income every month,
yeah,
you got to own assets. Well, I don't
yeah.
care if
I
you're
know.
investing in index funds like this, like the stock market, if you're investing in real estate and you're outsourcing all the work, or even I consider my lending semi-passive because I deploy large amounts at a time, get paid my 10 to 20% return, and I don't really have to think about it. It's just not as
Yeah,
active as wholesaling, fix and flipping, and it's if you're underwriting and analyzing deals right, it's way less risky, right? A lot of people do it the wrong way and it's very risky. I don't know what to tell you. That's why I tell everyone analyzing deals is the most important thing you could do.
yeah.
But you hit the nail on the head on something that I wrote down yesterday, which and I'm really bad at like quotes or whatever, like whatever. But and I got you, Miguel. We'll get you right now, brother. Consistency is a requirement to like winning. Like you need to be consistent. But like if you want true success, you need to have an intentional plan for that consistency. You can be doing something consistently, but not right. And maybe you'll get a few wins, but it'll be very hard to have true success, sustainable success without following the right plan. Right. And
Mhm.
for you, you were working hard, but you weren't working hard. You were working as hard as you could on the things that you thought were the best until you
Yeah,
aligned yourself with someone who showed you, hey, put that hard work towards this. You almost instantly had success. And now you're walking away with a portion of $99,000 just like that, and that's just
yeah,
the start. That's awesome. Congrats, brother.
yeah. Thank you, brother.
You need anything? Like, what do you need from
Ah,
people?
oh, I just would like to connect know your story because that's why I remember you talking about that, and we connect that day because they said, oh, I would like to talk with you
Right.
because uh yeah,
We'll do it,
I
brother.
would like
And
to
I'll
know
see you
you.
tomorrow
I
too.
meet you one time, and you got good vibe. I don't know if everyone know Michael, but I got really good vibe. Get close to him, and you see that vibe. I like it. That's
Thank
why.
you. And that's all
Mhm.
I want to. I just want to keep working with people that I enjoy being around and working together, right? People are putting in the work and all that. That's why I love what we got going on here because it's really people actually putting in work. Appreciate you. I'm going to go to the next few
Thank you.
questions.
Thank you. Go for it.
Thank you, brother. Thank you for sharing your story. Miguel, my man.
Yeah, so I know I just shared, but I was just curious to know to get a big assignment fee like that, is that typically when the homeowner that's going through the foreclosure process has like high equity? Like,
Yes.
is that how it works?
So
Okay.
yes, they have to have equity. So think about it like this. The reason why you make assignment fees on cash wholesale deals is because of the equity spread. So the property is worth $1 million. They're willing to sell it for $500,000 or the loan is 500,000 or whatever. Your assignment fee is the difference between the after repair value, what someone could sell it for once it's renovated, minus the cost it takes to acquire that property, and then minus whatever you're going to make. Because or I guess we'll say minus the profit the end buyer is going to get. If you're wholesaling it, you got to think about the end buyer. They need profit, right? So you got to subtract all that away. And if your assignment fee is as big as, I don't know how to phrase it right, but it's dictated by the equity spread, which can be massive, right? We gave the example of $1 million, $500,000 to acquire that deal or lock it up under that amount. In this instance, foreclosure. So, maybe they're forced to have to sell it this way because they have no other options and it's better than ruining their credit. Maybe the $500,000 includes money to the seller as well. You probably should be giving the seller money if you're making that much of an assignment. And you're leaving a lot of meat on the bone for the end buyer. They're willing to pay you whatever to get that profit as long as it justifies that, right? So the bigger the profit for the end buyer based on the equity spread, the bigger your assignment fee can be. The downfall with creative financing is the math is different. It's typically people are buying creative finance for cash flow and cash on cash return. Cash flow being your net profit. And if you're accounting for cash on cash return, it's your annual profit on that property, right? How much money are you making? right? Your profit, your income minus your expenses minus your reserves. How much are you making for that year divided by the entry cost it took to acquire that investment? Well, one of those entry costs is your assignment fee. Unless you're making a ton of cash flow on that asset, which is there's a finite right amount you can make on cash flow, right? A great deal is a $1,500, $2,000 of cash flow. It's like a really great deal unless you're going multifamily or something, you're going some crazy management strategy. You're going like above and beyond on the management. The entry, you could, once you add 5, 10, 20, 30K to the assignment fee, that adds to the entry and that brings your cash and cash return lower and lower and lower. If you guys want, I can do a simple Excel sheet kind of showing that in real time. But that's kind of, we have videos on that too. It's like, you can't really add $100,000 entry on a buy and hold creative deal. Cause like that would just destroy all the numbers, right? You can't really buy properties with that big of an entry unless it's going towards something useful. And assignment fees are useful because it allows you to get into that deal, but it's kind of just a wasted money. It's like paying an agent. It's like paying closing costs. It's just the cost of acquiring the property, but it's not paying down the debt. It's not doing anything substantial for you. Does that help?
Makes sense.
Yeah.
Yeah, it does. And so if we find properties that are going under foreclosure, but they have very small equity, are those more fall into the category for reaching out for like creative finance, or what's your take on that?
Yeah, because
okay.
like one of the entry costs is if someone's going to buy a property, and I was just talking to someone about this yesterday. If you are buying a property creatively that's in foreclosure, the first thing you're doing, some people do a loan modification, all that. I'm not going to get into the weeds of that because some of it is kind of unethical. But if you're going to take over that property, you're going to need to pay back what they're behind on, right? So you're going to pay back what they're behind on, you're going to catch the loan up, and then you're taking it over after that point. Maybe the seller makes some money in that scenario. Maybe they don't, but at least they're not going into foreclosure, ruining their credit, all that kind of stuff. So yes, if there's less equity, as long as it underwrites as a long-term rental, midterm, short, whatever the strategy is, that's when someone would buy that creatively. But that's more towards the entry cost they have to spend. So the deal still has to make sense. So when people ask me like, oh, rule of thumb or whatever, you got to analyze it and see, does that make sense for someone who's going to flip it? Because you can buy properties creatively and flip it, but it needs the equity spread. Whatever you put in all in has to be substantial, has to be less than what you can sell it for. Ideally, substantially less than, so you're making a lot of profit. So if you underwrite it and it makes sense, awesome. Does the cash flow divided by the entry justify that as a long-term hold? Or does the equity spread make sense for that as a flip?
Makes sense. Thank you.
Any other follow-ups on that?
No, I think I'm good right now. The only thing I have to do is just, get the list and go out. I guess there is one follow-up. So I'm not sure if this is like a mindset fix that I need to do, but I was told that in my market here in Portland, Oregon, there's a lot of people that, I'm sure it's probably in other markets as well, but we are a non-judicial and judicial state where I guess people milk the system to, continue pushing the foreclosure out. So they're kind of like, oh, it's kind of like a waste of time. But in my opinion, I'm like, if they feel that way, maybe there's more opportunity for me because their mindset is fixed on, hey, there's not really much out there, right?
So good thing you are following up Emmanuel, who just locked up a 100K assignment on a pre-foreclosure in California.
Yeah.
Right. So like it's possible, right? Doesn't mean it's hard or there's other things that are affecting your ability to do that. Sure. But like, it really is a mindset thing. And if it doesn't make sense in your market, maybe door knocking for pre-foreclosure in your market isn't the right strategy. Maybe doing something different is. I'm not really going to go into the weeds of that piece of it because I'm not the expert in that. Like, I'm not doing it every day to say, hey, trust me on this. Trust the people that are doing it every day. But you can basically make any acquisition strategy work in any market. Some are better than others. Like for me, trying to do to target tired landlords with lots of equity on multifamily, which was really successful for me in Alaska. That doesn't make a lot of sense in San Diego because the fact that they have a ton of equity, they're making a bunch of money, they have Prop 13 in their favor, so their property taxes are really low. Like certain strategies don't make sense in that market, but anything could work. Your job is to figure out what makes the most sense in that market for what you're doing. And that's connecting with wholesalers and all that who are successfully doing the thing in your market. And you'll never go wrong buying a property under market value or locking up a property under market value and wholesaling it to someone else. Right? Like that's going to work anywhere, anytime. And typically the bigger the spread, the more expensive a property can be, the bigger your returns would be.
The
Or
first
your-
hurdle would be coming up with that cash to buy it cash though, right? Well, I mean, I guess that's when you would
Don't worry
find
about it's not
partners.
your job, bro. Right? That's the end buyer
Gotcha.
stuff. If it's a good deal, there's always
Oh, I
money.
see. Yeah,
If it's
yeah,
not
yeah.
a good
Gotcha,
deal, don't
gotcha.
worry about it. Especially if you're wholesaling.
Gotcha.
If you're buying, holding, different, but you're probably not buying large fix and flips to then rent out. Like, that's aligning that strategy.
Right.
Typically the lower the equity, the better for creative deals, because that's less money you have to pay out to acquire it. Or you're financing it sub two, so you're not paying that all out, or seller financing it and sub two. Like, it just depends on the deal itself and what the current debt structure is and what makes the most sense for that investment, and really what makes the most sense for the seller. Because at the end of the day, some people would rather lose their house to pre-foreclosure than sell it creatively or sell it to a wholesaler or whatever. Your job, like Emmanuel did, is to build that relationship and ideally articulate their options and see which one they want to do. You just want to be a trusted resource to them. I think that is a huge part that's led to the success of my business partner, Adam, and I, is that we're not pushing anything. We're not forcing anyone to do anything. We're just saying, here's the various options. We could buy it in this scenario. If that works for you, awesome. Let's get it done. If not, no worries. We have other opportunities to pursue. And one of my mentors says, the reason why you're focused on that one deal is because you don't have enough leads and opportunities coming in. Focus less on trying to force that one to work and bring in more leads. Because when they're right, they're right. Emmanuel said 2 contacts. He got it done. So when it's right, it's right. Don't try to force things unnecessarily. Be more abundant, and it is a mindset thing. I'm not the mindset guy, but you're in sub 2. Do the mindset zooms when they come up. There's some killers in mindset. Killers in mindset, fix and flipping, wholesaling. For me, it's like more systematic. It's like mindset, whatever. I mean, there's issues, you got to overcome certain things with issues, limiting beliefs and all that. But I've always thought the more that I want to accomplish, the harder it's going to be, the harder I'm gonna have to work, the more, emotional hurdles I'm gonna have to overcome. If I want to get that thing done, I just have to do the work. If I don't, cool, I don't have to do the work, right? Like, it just won't happen at the same time. So I just turned it from mindset to like, here's the system. If I want Z, I got to do A, B, and C, right? Like, I can't get Z without doing A, B, and C. It's not a mindset question. It's, will I do the task to get that done?
Love it. Thank you.
Cool. We'll do that. We'll do that, brother. Effectively comp and non-disclosure state. Great question. Great question. Non-disclosure comping. What market? That was like Alaska for me. And then structure PML, PMP for NOAA. You don't want to use other people's money for properties that, well, let me, okay. I'll answer those after. Let's go, Kafar. Let's go, bro. Let me add you.
Hey, Michael.
Yes, sir.
Just been trying to kind of do the same path of just passive cash flow, right? Since, planning to travel next year and just thinking about, I have some buy and holds already, bought it through like Burr method before. So
Awesome.
right now I'm actively looking on generating the leads for like a multifamily, not a huge one, maybe like 5 to 15 doors, maximum maybe 20.
My
right?
favorite. I love small multifamily. My
Yeah.
financial freedom came from 2 to 20 units. Like, that's
Right, yeah. I remember when we met in Orlando, you were telling me about your Alaska
Right.
multi-families, and it was amazing how you did it, and everything. So I don't want to overwhelm myself since I'm just entering. I do have a 4-plex. I feel like it's very manageable. So I kind of want to make a next step, right? Do maybe like a 5-plex, 10-plex, something like that.
How'd you
The
buy the
trouble-
4 unit?
A 4-unit, it was just a regular Burr method. I had a duplex in Sacramento, refinanced it with some cash, used it towards purchasing.
So you use a
the
traditional
4-plex.
loan. I just want to clarify that. You went the traditional route.
Very
is the
traditional
plan
route.
for the next one? Are you trying to go creative? Are you doing traditional?
Only creative. Yeah, yeah, definitely. I'm sorry
So
to
if you want to
interrupt.
go creative on a multi, right, the biggest thing to understand is the debt. 4 units and below are very, very, that's like our bread and butter, right? 4 units and below is the same thing as a single unit, right? It's either for the most part, it's either a FHA loan, VA loan, conventional loan.
Right.
Like, those are easy to do creatively, typically, not
Okay.
as easy to do with a commercial loan.
And
right?
why is that?
5 units and above.
Is it
So I want to
because
clarify that.
of the
That's
commercial loan in place?
Yeah, with a commercial loan in place. You can do other creative strategies. Like what I did was a seller carryback post closing, or in the sub 2 community. We call it
Can
a
you tell more about it? Mm-hmm.
Yeah, so what we did is I took out a commercial loan, a brand new commercial loan for that property, because I could not sub to his commercial loan. And
Gotcha.
the reason why is because every 5 years there's a balloon on those. It's amortized over 25 years. And every year for commercial loans, for the most part, you are providing statements, financial statements, and all these things. So there's a lot of eyeballs on your loan every year. Where a
Gotcha.
typical 30-year mortgage, no one's really looking at it. Just make your payments and everyone's leaving
Right.
you alone.
Mm-hmm.
Don't trigger due on sale clause through doing insurance transfer wrongs and all that. But no one's sitting there scrutinizing your loan like they are commercial loans every year. So what I did was I took out, it was $800,000 for the 20 rental cabins. The seller had a $400,000 loan, and so he had $400,000 of equity. I structured it in such a way that I understood what the seller wanted. He wanted the sale price, and he needed at least $150,000 to purchase his next property in Denver. And he was moving out of Alaska, so he did not want to think about Alaska anymore.
Okay, so he wanted to cover his 400K loan, additional 150K be out, right? Mhm.
Right. And I said, okay,
But the
that's
sale
awesome.
price was 800, right?
Right. And I said, okay, let me ask the bank, because I don't have 25%. At that time, I was in the military, just bought a 2-unit and then a 4-unit. So I didn't have a lot of money. And I said, part of it too, it's not that, my wife and I made pretty good income. We just invested all of it into passive
Makes
index
sense.
funds. So I said, hey, let's see if there's a way that you can help me with my down payment. If you're open to seller financing this, that's when I started learning about seller financing. At that point, I was already doing off-market deal finding, wholesaling cash deals out of state. So it made a lot of sense of why couldn't I apply that, off-market deal finding for seller finance opportunities. I actually didn't even target him for this. I targeted him for a 2-unit that he owned outright. This was something he was more willing to sell than the other one. I said, okay, let's see if this works. I don't have $200,000 to pay as a down payment, and then another it was around 30K at closing costs and all that.
Right.
So I asked the bank, a small credit union, and said, yeah, he can provide a 15% seller finance or seller carryback, where he'll finance 15% of your down payment. Well, I needed to bring 10% then, 80K plus another 30-ish K in closing costs. Well, I didn't have $110,000 either. So I said, all right, well, seller, I really want to do this. It sounds like we can make this work, but here's something that I'm thinking. And this was before I joined Sub 2. I had to just figure it out. That's actually why I joined Sub 2 later. I saw a video talking about this strategy, and I said, oh crap, people are doing this thing the right way. I want to do it the right way now too, because I didn't do it. I just kind of freestyled it. So I said, hey, would you also be willing to finance my $110,000 that I need for closing costs and all that on top of what you're already financing, the 15%? He said, yeah, as long as I get my 150, that's all I need. I'll take payments. I'm happy. I just don't want to manage the asset. I don't want to own it. And I don't want to, I just need some of the money to be able to pay my, to pay my down payment for my next property. I said,
So
awesome.
he technically financed your down payment of 25%.
Yes, but I had to do it in 2 increments. So he financed the 10% and closing costs after he got paid out. So at closing, so what I had to do was raise around $30,000, I believe, between 13 different sources. That was the first time I ever raised capital. I didn't know what I was doing. I got 2 private money lenders at I gave them 12% interest annualized. And it's funny now because I understand the terminology, but I said, oh, I'll give you 12% and I'll give you a few points for it, but I only need it for 30 days. So I'm not going to hold it for a year. I just need it for 30 days, and then I'll pay
30
you,
days for it.
the interest on that. And actually, I think I paid a ton of money. Well, relative to them, but they covered a third of that. I sold some stock. I had some cash. My wife and I took out some credit cards, 0% financing.
Pulling all the cash.
Finance, took a margin loan against a little bit of crypto I had, a little bit of stock it was 13 different sources to make this money.
Awesome.
For temporarily to be able to do that.
Awesome.
I didn't even have the right contract necessarily to guarantee that he would send me the money after. I got lucky. I didn't know, I didn't have all the details at that point of how this would work. So I closed on it. And then right after he received his 800,000 minus the $400,000 of debt, minus the 15% that he financed, he had his money left over. He sent me everything minus the 150 that he needed and financed that back to me. And then I paid everyone back and then made a few, like almost $5,000 when I bought that. property.
Awesome.
I got
Awesome.
$5,000
The difference
extra
ended
from
up
him
being
in that
5K,
scenario.
right? And you
So I
ended
like
up with
made
the
money to buy his
unit.
asset that generated me over $3,000 a month in cash flow, which was sick.
It's
But I was
amazing.
stumbling my way through it. And that's how I structure that. You can do something like that with commercial. You can do loan assumptions with commercial, but substituting commercial loan is not impossible, nearly impossible. And even if you get through it, you're going to be heavily scrutinized. The loan itself is going to be heavily scrutinized.
Yeah.
So just understand that. Maybe you buy the LLC that owns it or something, but that's not something I can comfortably say that I've done
Right.
or know enough about.
What do you think is the easiest way to seller finance?
Focus on 2 to 4 units or
2 to
do
4
what I
units, right?
just said, like the Morby method or a seller carryback post-close.
Got it. Or do the seller carry
Or
back,
they
right?
own it outright and they do a seller finance outright, but then you raise like 10, 5, 10, 25%, or you use a commercial loan and you raise the down payment for it. There's a variety of ways, but that's not all creative, right? The creative ways are
Right.
gonna
Yeah.
own it
So
outright and you seller finance, you do the seller carryback post-closing if they need a larger down payment, or you want to come out of it with very little money out of pocket, or you just focus on that 2 to 4 unit space, which is why
Gotcha.
my business partner and I have only really done 4 units and below.
Mhm.
Or like when we buy properties that are bigger, we're doing them strictly seller financed.
strictly seller finance where everything is paid off, right? And then are you saying the bank then is willing to land on second position because their down payment is going to be on the second position, right? Or you're telling the seller be on the second position
Seller,
for the
if it's a
financing
Morby
part,
method
right?
or seller carryback post-closing, right? The Morby method,
Yeah.
the bank is always going to be in first position, whether you're sub two, new debt, whatever, they're always going to be in first position. They might not even want someone in second position, but that's where they would have to come in because the bank's mortgage is going to have to be in first position no matter what.
Right.
If there's a
So
mortgage in place.
If it's a paid off situation, let's it's a fiveplex, all paid off, right, by the seller, you can then have to kind of offer him to be on the second position with the financing part, right? He's
Right.
let's say 25%
can-
comes down from the bank, but they're in the first position. Say, hey, look, I don't have 25% down. I'm gonna go to the credit union, get that 25% down. Would you be okay to be on the second position for the remaining 75%, right?
Right. Kind of. Really, the bank is doing the 75% or whatever you want the bank to finance. Let's say
Gotcha.
you're buying a $1 million property. The bank's giving you $1 million loan, right? To buy that property minus your down payment, right? And that's what the seller will finance.
The down payment. Pretty much
After
it, yeah.
they'll finance
Got
whatever
it.
the bank doesn't finance, essentially. Maybe they finance, maybe it's let's say 60% bank, 20% seller, and you bring in 20%. I don't know. It depends on the deal itself. And usually if a seller needs very low, money down, just go seller finance. If they need a large down payment, that's when you do the Morby method or the seller carryback post closing. Because then they will be the bank will be the reason why they get that large down payment. And then the seller will then finance you it back, like whatever they didn't need.
Do you recommend going with the smaller credit unions versus like bigger banks?
I do, but it depends on the asset. But I do. I mean, I don't know. I don't know if there'd be a reason not to use a small credit union, except they might more heavily scrutinize that. But I'm not consistently sitting there connecting with lenders for multifamily or commercial loans either. So I just go to the local market. And for my rental cabins, I needed to do that. Like, I didn't know what big bank would finance that. I knew like the way it worked was the CEO even went and walked the property. He understood the whole picture. CFO was there. They understood what I was doing and they understood my vision and how I was already profiting from day one. And then how I would be further profiting once I improved the property, right? Made it nicer, re-graveled it, pressure washed, painted, all that kind of stuff.
That's good.
Yeah.
That's awesome. That's awesome.
It's
Sorry.
more personal. That's why I like small credit unions.
Sorry, throwing too many questions for your last question
Keep it
is
going.
it's more not even a question, it's a question to everyone. Anyone can chime in. I'm just having a hard time generating the leads, like you were mentioning, right? Like sometimes we're just so stressed on one situation because we don't have enough leads, right? I've been actively looking Facebook, LoopNet, Redfin, MLS, trying to connect with as many. Even when I talk to an agent in LoopNet, I'm saying, hey, look, throw me some other deals you may have, right? Are any of them are creative, but I feel like I don't have enough questions. So my question to you is, what's the most effective way to connect with the proper wholesalers or proper people that are offering?
Yeah, I think
selling.
the best thing you can do is focus on something and specialize in it. So instead of trying to do everything, focus on one, maybe two strategies, and then do that. Just focus on that. Don't do brokers, MLS, off market, your own lead gen, wholesale, because that's too much for anyone to handle. Like a
Right.
successful business is maybe doing one, maybe two of those at the most. So focus on what you want to focus on at one time and get really good at that. That would be the
Mhm.
number one thing you could do. For me, what I do is I buy all my, well, my business partner, we buy like 80 to 90% of our deals from wholesalers. Do we wholesale sometimes, or do we sometimes put our own deals under contract? Yes. But the primary lead gen for us is wholesalers. But I'm not buying most of the deals that wholesalers are sending me without first well, actually, I'm underwriting all of it. But then we're typically saying, hey, I see the potential in this deal. You don't have it at the best terms. If I see it's viable to renegotiate it this way, either you or I can renegotiate it with the seller. If they're open to do it, I will be the buyer for this.
Mhm.
Right? If you can do that, then I will buy that deal. So it's wholesalers, but helping them restructure their deals to make them better for what I'm looking for. That's
Perfect.
my main lead gen. Do we sometimes snipe certain investments, like the $2 million property I locked up for less than 60K in San Diego, or another $1 million multi-unit in San Diego, or a few deals in the Carolinas and all that? Yeah, we do a few of our own lead gen, but the majority is wholesalers and us leveraging our ability to analyze deals exceptionally, and more importantly, understanding what is important to renegotiate, and locking up the deals at the right terms that I want to buy them at, that we want to buy them at.
Perfect. Perfect. And connecting with wholesalers, do you usually go on meetups, Facebook groups, a little bit of everything, I would say?
Meetups are fun, but they're not the most effective, in my opinion. I think, are
That's
you
what I
part of
feel
Sub
like as
2?
well. I am.
Oh, so okay. So if you want creative finance deals, the number one place is, in my opinion, Sub 2. I mean, that's where the majority of creative finance deals are structured. At the same time, understand there's more competition and all that, but the more you are interacting with wholesalers, the more you're top of mind when they want to send you deals. But just being quick when they send out, I mean, people have, there's big wholesalers doing a lot of transactions, getting on everyone's list, filtering through the stuff that doesn't make sense for you quickly, and then focusing on the deals that do make sense is the number one thing you can do. And if a deal sits for a while, but it has potential, and you see it once or twice or three times, or I guess 2 or 3 times, then say, hey, do you think the seller would be open to doing this structure instead? Then I could buy it. But connecting with people, meetups are great, especially for that local market. But if you want to buy out of state, you want to buy, and you want to do things at volume, that's what this is, right? I'm connecting with wholesalers. I have my school. I'm posting on social media. I'm posting in Sub 2. I'm posting in all these areas, so people know what is it that I want. I want deals, and I want capital, right? Those are the things I want. And what do I do? I buy real estate, I lend money, and sometimes I renegotiate deals and sell them to other people instead of me keeping them all. Those are the things that I want, and those are the things that I do. Sharing that as much as you can is the number one way to get what you want. That's why I say these communities and all that is valuable. This community is phenomenal for buyers, lenders, capital raisers, and intentional connectors. Connect with a connector who may find you the right deal, or start connecting with wholesalers. That's not the best for this community, because there's wholesalers, but that's not what this is geared towards. Sub 2 and other Facebook groups and things like that are much better for that.
Gotcha. Mike. Thank you so much.
Of course.
For everything.
I'm going to drop you real fast. Let's see. Joe, do you want me to pull you up, or you just want me to answer your questions?
I don't have anything kind of beyond those really. So yeah, we can just get into the questions.
All right. So how do you effectively comp in a non-disclosure state? So all you can really do is comp based on what price it went pending at. I don't know a better strategy than that. If it was listed for $500,000 and it sold very quickly, I'm going to assume it sold for very close to $500,000. You can maybe pull up PropStream and all that and see the loan on the back end, but the actual sell price is not disclosed, right? So those are the strategies. Looking up the debt that came with it, but I don't know what their down payment was and all that. I'm going to assume if it sold quickly around that price, or it was listed and it sold in a quick time frame, it was probably around that price. If it sold, it took a long time to sell, I'm going to assume it's a little bit less, or either way, it took a long time to sell anyway. Hopefully that's helpful. It's not perfect, but it's the best you can do. Luckily for you, it's the same as everyone else can do. It's an even playing field. Maybe people have better ways to do it, but that's the strategy that I've implemented. And then how do I structure PML for PMP on no equity, negative equity created deals? I am not, with very rare exception, less than 10%, I am not buying or structuring deals that are negative. Well, most of them are negative equity if you count the debt and the loan on top of that. They tend to be negative equity if it's a buy and hold, right? It's typical. That's commonly what's going to happen because you're adding so much to it. You're paying the entry cost, and you have this new loan in place. But negative, I assume you meant, oh, you don't mean negative cash flow though.
Mm-mm.
Okay,
No,
good. Because you already understand
Oh.
there's no point of buying a deal from a primary lender that's negative cash flow, and then it's going to
Mm.
further lose money when you're paying the lender back, and then you have no principal. You won't be able to pay that principal back either. And if you're a lender and you're lending on that, bad on you. Don't do that. Don't lend on deals that are losing money each month. There's just no point of that. And if it's a private money partner, maybe like one of our properties, that multi-million-dollar one in San Diego, is pretty cash flow neutral. But we have private money partners that were interested in that one because they want ownership benefits. They want to have partial ownership so they can get the appreciation benefits. They can get the tax benefits. They can get the debt pay down benefits. Like we have an asset that sometimes loses $500 to $1,000 a month, but every month we're paying down $4,000 of debt, principal pay down. That property, even if I conservatively said 5% at the value that it's at, annual, like 5% growth, it's generating massive amounts. I'm exchanging up to $12,000 of cash flow, like being negative cash flow for that massive debt pay down, almost $50,000 a year is a debt pay down, which gets better every single year. All the tax benefits associated with it. I pay literally zero taxes and haven't in years, and all legally, right? All legally. And and then the property is appreciating in value. It's adding to our net worth and generating the wealth that I want over the long term in the exchange of some cash flow in the short term. Hopefully, I know you didn't ask about that cash flow, but that is a strategy to private money partner with that. Negative equity, just understand a lot of your creative deals are going to be no equity or negative equity when you add all the debt to it. First position, second position, PML, PMP, whatever, all that is probably going to be negative equity, but you're not buying it. If you're buying it to flip it, well, you can't do that, right? Because you're going to lose money to flip because it's worth, your debt is more than what's worth. If you're buying long-term, you all got to be on the same page long-term to understand why this makes sense, right? The cash flow justifies the entry costs, and the equity, as long as it's somewhat reasonable, it's not too negative, it will make sense, right?
Yeah. So with that, I got going back to the other question. Sorry, I did have it. So in the MLS for non-disclosure states, can they see the sales price?
I don't know.
Okay. And then
talk to agents in the market that you're talking about. That's going to be your best resource.
Gotcha. And then for that one in particular, so going back to the equity, so that's what I'm finding is like I'm getting like you're saying, like once you add in the entry costs and the loan, the first position loan, all that kind of stuff, like it already is like very, very close to little to no equity, or sometimes a lot of times negative equity. And so that's something that when I was presenting deals to different PMLs, they're like, oh, well, it's negative equity. So if I have to, foreclose on you and all this kind of stuff, then I'm gonna lose my money and blah, blah, blah,
Right.
blah, all that kind of stuff.
gotta-
And so I'm like, how do I like,
you got to train them. You got to train them to the way that you're doing business. Not
Gotcha.
like in a weird way, but like you got to show them, hey, I understand the mentality that you're coming from. You're coming from a fix and flip mentality. If you foreclose on this property, you want to make sure there's an equity spread to pay back your debt, or if it gets like auctioned or foreclosed on, you're going to get paid back what you're owed because there's enough equity spread. However, we're talking about longer term buy and holds, right? If they have to foreclose on you because you're not paying to them, they're not worried about the equity spread. They're worried about, does the cash flow justify the amount of money I had to put in for that deal? Does that make sense? You got to train them in the sense of, hey, I know the way you're thinking about it because I understand that for a fix and flip. For a buy and hold, it's different because in this instance, if you have to foreclose on me, you're taking over the cash flow. You might be negative for a little while, but you own this asset and it's going to generate the cash flow that you want. So only lend on deals that you potentially want to own if I mess up. But I swear to you, the last thing I'm doing, my business is going to be very successful if I am buying deals using other people's money and then giving it right back to them, right?
Mm-hmm.
So that's where the proof of concept is very beneficial as well. Doing the thing and then making sure that's a deal that they would want to own. We call it like loan to own, because if you fail to perform, now they're going to own that asset. That's their protection. Does that property in that market make sense for them? Do they want to own in that market? Do they want to own with the cash flow that they're seeing? Maybe they'll now have to be active. So make sure you're underwriting for property management and all that. And it's a little more passive for them. Like you're just articulating, if you foreclose on, it's not the property's gonna be foreclosed on and your debt's gonna get paid out. And if there's not enough spread, you're not paid back. It's you're gonna own this asset instead of me now. Is this an asset that you'd want to hold without me involved? You know?
Yeah. So how would you, last thing I have, so how would you counter them when they say something along the lines of like, okay, yeah, I understand that. I see what you're saying, but let's say we net $1,000 a month in cash flow, and I want to take, like, the PML, want to take a majority, if not all of it, until I get my money back, and then you can have whatever at that point. Because then I don't really see necessarily the benefit of me putting together and structuring the deal if I can't get any, like, I don't have any equity, and I don't have any cash flow from it.
Wait, I'm
So,
sorry. Can you repeat that question? A text from a deal that we're locking up came through and it distracted me. You said,
but yeah, but
I think I got lost in the very. Just repeat that and I'll answer that, I think, pretty easily.
yeah, because another strategy I've heard is like offering them some of the like giving them the cash flow, or a good chunk of. So I've had
So
PMLs
not
as
a
well.
primary lender, but primary partner.
The lender I've had, well,
The primary
specifically,
lender here, for everyone listening, primary lenders are lending you money for a fixed interest rate return on that money. They lend you $100,000 for 12% interest. You're going to pay them interest only payments, right? Let's say for 1 year, and then you owe them their principal in that 1 year. If it's 12% interest on $100,000, that's $12,000 of interest for the year, or $1,000 a month of interest that you're paying them, right? So that's all it is. If it's a primary partner, they are lending you the money and you guys are buying it together. God, these people, I should put my thing on mute. They are lending you the money. They're not lending you the money. They're buying a stake in that property. They're buying ownership in that property. So now you guys own it. Let's say 50-50. You own 50%, they own 50%. You guys split cash flow 50%, 50%, depreciation, appreciation, everything equally 50%. Or in your operating agreement, you outline, okay, lender, you keep, or, my primary partner, you keep 80% of the cash flow. I get 100% of depreciation. I keep everything is in you guys control that together. What are the terms that you're doing? Typically, what most people do is we own it 50-50, 60-40, 70-30, and everything is split based on that.
Gotcha. Okay, that makes sense. Thank you.
That's not exactly the way I do it anymore, but that's like the high level concept. It's like basically that.
Gotcha. Thank you.
I just add like a preferred return now. So like they keep X amount of like this much interest on their money before, like, let's say it's $100,000 loan and I give them a 5% preferred return. Well, the 5% of 100,000 is $5,000. They're going to keep the first $5,000 of cash flow per year, split up over the periods that we're paying. And then we're going to split the rest based on cash flow. I do that to then provide more value to my partners because I'm in it for more of the wealth. I still get the cash flow, right? It still makes sense for us, but I will front load the cash flow to them to allow me to keep more ownership because I'm more focused on wealth and a lot of other people are focused more on the cash flow because they need to become financially free or they need something like that. The cool thing is you can structure it however you want with them. And if they don't like it, that's not the right lender for you. Abundance, right? If the seller doesn't want to sell, if the lender doesn't want to lend, whatever, that's not the right, go find more leads, go find more lenders, go find more people to partner with potentially, right? Don't try to convince someone to do something that they don't want to do. That's hard. Don't fight against the grain. There's plenty of people that want to do it. There's plenty of people in our community that are my lenders and that want to lend on more great investment opportunities.
Sounds good. Thank you.
Cool. Of course. All right. Anyone else? I did see a hand, but I think I saw it drop. I got a few more minutes for y'all if you need it. Giselle left. I think it was her. Any more questions? Anyone else want to introduce themselves or anything? This is also going on YouTube. So, and school community, it'll be in the vault, right? So people will see this. So if you want to intro yourself, tell people what you're doing, who you are, where you're at, what you're looking for, what you can offer, great opportunity to do so. Oh man.
Yeah, I'll hop in on that. So hey everyone. So my name is Jodeci Hill. I am a cash buyer in the states of Virginia and Kentucky, specifically Richmond, Virginia, and the greater Richmond area. And then Kentucky, Lexington, Kentucky, and the greater Lexington area as well. So me and my wife own a handful of properties. We own about 5 doors currently spread throughout both states. Looking to add more deals as well, primarily through creative acquisitions, and then looking to partner with different PMLs and PMPs in order to take those down and put those in the portfolio and grow everyone in that community. And then in Richmond, Virginia specifically, we're looking to take down our first fix and flip. And so that's what we're looking for right now. So we're underwriting dozens of deals on a weekly basis in order to try to find something that fits into our particular buy box. So if you have anything that comes across those 2 states, definitely feel free to let me know. I've been in real estate for probably about 5 or 6 years now. And aside of like the portfolio that me and my wife own, we also are part of a wholesale company here in Virginia. So we market pretty much to the entire state of Virginia minus Northern Virginia, because that's a totally different animal in and of itself once you start getting around the DC market. And then we also market out in West Virginia, where one of our partners are living currently. So that's out in the Fairmont, Morgantown, and Clarksburg area. So right around the WVU campus, we do some stuff out there also. So I like to think I made a post about a gift. So I like to think my gift is numbers. So I've been underwriting for quite some time, looking to get better at it. But if anyone needs help with any underwriting, feel free to shoot me a text or email or DM or carrier pigeon, however you need to get in contact with me.
And I'll just highlight, if you don't know Joe, you got to meet Joe. That's who you prefer, right, Joe?
Yeah, that works.
Okay.
Yeah.
So you got to meet Joe. Joe he just joined the community. He's added so much value already from property management, deal analysis, just a lot of valuable comments. His intro was really thorough. He's like literally adding so much value to the community already. He's a buyer. He's working on raising capital to scale his portfolio. Similar to what I did, right? Build my portfolio, then start scaling my portfolio through creative financing and leveraging capital raising. And it's very apparent. Like I'm not saying lend money to Joe. That's for you to figure out, analyze the deals. I'm saying that Joe seems to have a very solid grasp of numbers, what makes sense for a deal and what doesn't. He's quickly filtered through what other people have posted and said, oh, I don't see that necessarily working, and here's why. Like, he's added a lot of value, and he continues to showcase his knowledge in everything that he's doing. Once again, it's your due diligence. If you decide to work with Joe, that's on you, right? I'm saying he's a trusted. No, I'm not saying he's a trusted resource because I've never lent to him. I'm saying he has a very solid grasp of this. Make that connection and determine for you if it's a great fit. That's what I'm saying.
So, thanks, Michael.
Thank you, Joe. Appreciate you, brother. All right. We good, guys? Excellent. All right, y'all. You have a great rest of your day. Let me get y'all on the screen real fast. All right.